Hello friends, welcome back. Today I'm doing something a bit different, a personal deep dive into a burning question I've had on my mind. Could Cardano realistically reach $5 by 2026? It's a question that keeps popping up among ADA holders, and in our free educational Discord, I see you guys. And as an ADA holder myself, I want to explore this together in a storytelling way. First, let me set the scene. It's December 12th, 2025. The crypto market feels like it's on the brink of something big. Cardano's price recently pulled back from around 55 cents down to about 40 cents, which might sound like a nasty drop. And yeah, seeing ADA slide like that made my heart sink a bit. But here's the weird part. I noticed this drop actually lines up with a pattern on the charts, a pattern that's been forming for years. Cue the dramatic music because I'm talking about a multi-year descending wedge. A multi-year falling wedge pattern on Cardano's chart shows price compressing between lower highs and a strong support around 40 cents. Such patterns often precede big moves once a breakout occurs. The chart illustrates ADA's downtrend since 2021 converging into a narrow point. Yes, you heard that right. Cardano's been stuck in a giant wedge since about 2021, with lower highs squeezing toward a base support around the low 40-cent mark. We've seen ADA touch that support line repeatedly, almost like it's testing the floor for weaknesses. Each time it bounced off approximately 40 cents, it signaled the bears might be running out of steam. And on the upside, this wedge's resistance was up around the 52 to 55 cent zone, which, lo and behold, is exactly where ADA hit a ceiling before this recent pullback. Talk about art imitating life, huh? It's as if ADA's price was following a script. Climb up to approximately 55 cents, the top of the wedge, then get smacked down to support at approximately 40 cents again. It's almost reassuring, in a twisted way, because it means nothing's fundamentally broken. ADA is just obeying this long-term pattern like it has for years. Now, why am I boring you with wedge talk? Because falling wedges can be a big deal. In classic chart analysis, a descending or falling wedge often hints that a bullish reversal could be coming. Picture a spring being slowly compressed. The energy is building up. If, and this is a big if, ADA can finally break out above that wedge's resistance, it could be like releasing the spring. Historically, when similar patterns break to the upside, the price often sees a strong rally. In plain English, a wedge breakout could send ADA flying, potentially the start of a significant uptrend. I'm not promising anything. I'm not a fortune teller, but the setup is there. It gives us a first clue on our treasure hunt to 5 ADA. Before we get carried away dreaming of rockets and moon landings, let's inject some common sense. Wedges or not, $5 is a long way from 40 cents. We're talking more than a 10 times gain, which in crypto isn't impossible, but it's no walk in the park either. So I rolled up my sleeves and started investigating all the factors that could pave a path for ADA to climb that high by 2026. And let me tell you, it's quite the story, full of twists, some humor, and a healthy dose of reality checks. Grab a snack because we're diving deep into this together. Let's start with the technical side, the charts. I already introduced the multi-year descending wedge that Cardano's been stuck in. This thing is basically Cardano's 4-year story in a single picture. Since the huge spike and crash of 2021, ADA kept making lower highs, ouch, but also found a strong base of support in the 0.40 range. Imagine drawing 2 lines on a chart, one sloping down, that's a series of lower highs, and one flat or slightly up, that's the support. Those lines form a wedge that's been getting tighter and tighter. Now in late 2025, ADA's price is squeezed near the tip of this wedge. Why is this exciting and a bit nerve-wracking? Because wedges don't last forever. Eventually, price has to break out one way or the other. Think of it like a volcano ready to erupt. Pressure builds up and then boom, it blows. If ADA breaks down below the base, below approximately 40 cents, that'd be like the volcano blowing downward, not what we want to see. But if it breaks up past approximately 50 cents to 55 cents, that could be a volcanic eruption to the upside, potentially kicking off a big rally. Here's some context. Technical analysts note that ADA's wedge is now at a make or break point, pressing into that upper boundary around 0.48 to 0.50 as we speak. They've observed similar patterns in ADA's past cycles. Long consolidation phases, basically hibernation, that lasted a year or more, which then gave way to explosive breakouts once the pattern resolved. Now, to be clear, a wedge by itself doesn't guarantee a breakout will be upward. It predicts volatility, not direction. So ADA could very well break the wrong way. But the signs lately have been tentatively optimistic. Some momentum indicators are turning bullish. We've seen things like the RSI breaking out of its downtrend, hinting that the momentum is shifting. Volume even picked up above $1.1 billion in daily trading recently, which tells me there's growing interest right now. Buyers testing the waters. So the chart story is, ADA's coiled up like a spring. If that spring uncoils upward, it could send ADA shooting to higher levels in a hurry. We might quickly revisit the 50 to 60 cent zone, and above that, who knows? Maybe $1 isn't as far-fetched as it looked during the depths of the bear market. And once sentiment flips bullish, big moves can happen fast in crypto. However, a realistic path to $5 isn't just line go up on a chart. We need fundamental fuel to sustain a climb of that magnitude. So, let's move beyond the squiggly lines and talk about the meat and potatoes of what could drive ADA upward. There are 5 key ingredients I've identified in this investigation, like pieces of a puzzle. Market rotation into large cap altcoins during a bull run. Increased staking participation, reducing the circulating supply. Major network upgrades boosting Cardano's fundamentals. Institutional interest in Cardano as a research-driven, safer altcoin. Cardano's strong community and liquidity base. Each of these deserves its own little story. And as we go through them, keep that $5 goal in mind. Is each piece bringing us closer to a scenario where ADA could reach that level by 2026? Let's find out. Oh, and quick interruption before we get into the juicy parts. You know I have to do this. This might shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all the money you invest. You should always do your own research and consult a qualified professional. After all, your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video is for entertainment and educational purposes only. Whew! Mandatory disclaimer out of the way. You know I had to. Now, let's get back to the fun stuff and continue our journey. If ADA is going to hit $5, it likely won't do it in a vacuum. It would probably happen during a crypto bull market. And bull markets have this almost predictable rotation of money. I've seen it before and it's like watching seasons change. First, Bitcoin pumps like crazy. Bitcoin grabs all the headlines, dominance shoots up, everyone's talking about it. Then Bitcoin starts to chill out a bit. Maybe it's not growing as fast or people start taking some profits. What happens next? Historically, that's when large cap altcoins have their time to shine. It's a pattern as old as crypto bull runs. Bitcoin runs, then the baton passes to big alts. Why does this rotation happen? Think of it like this. Investors who made gains in Bitcoin look around and say, what's lagging behind? What could pump next? Their eyes land on well-known altcoins that haven't mooned yet. Ethereum, Cardano, Solana, etc. These are not tiny unknown projects. These are the heavyweights just under Bitcoin's shadow. When money rotates out of BTC, a chunk of it flows into these large caps and suddenly the altcoin season is on. We've seen it time and time again. According to historical trends, Bitcoin's dominance, its share of total crypto market cap, dropping is often the signal. When BTC dominance falls, it's typically because capital is moving into altcoins. And that, my friends, is usually the start of an altcoin season. To put it in perspective, one analyst described the dynamic perfectly. This is the classic pattern of a crypto bull market. Bitcoin leads early, altcoins lag behind. Then, suddenly, the dynamic flips. Altcoins begin to outperform dramatically. During those periods, we've seen some altcoins easily do 5 times, 10 times or more from their bear market lows because the pent-up potential gets unleashed when the spotlight turns to them. Cardano, being one of the top altcoins, currently around the number 10 by market cap with billions in liquidity, is exactly the type of coin that benefits in the first wave of an alt run. It's large enough to be on everyone's radar and listed everywhere, but still has more room to multiply than Bitcoin or even Ethereum at that stage. If we enter a full-blown 2025 to 2026 crypto bull run, it's reasonable to expect ADA to get swept up in that rotation. In the last bull, remember, ADA ran all the way to about $3.10 at its peak in 2021. Could it do something similar or bigger in the next one? If conditions are right, possibly yes. A rising tide lifts all boats, as they say, and in a euphoric market, large caps like ADA often see massive inflows. Now, am I saying this guarantees 580A? No, but it's one necessary piece of the puzzle. We'd likely need a strong bull market environment where not just Cardano, but many altcoins are booming. In such an environment, the idea of ADA at $5 becomes a lot more plausible because everything is inflated. Think of it like the wind at ADA's back. Another point in ADA's favor, it's perceived as a bit more stable or lower risk, relatively speaking, among altcoins. It's been around for years, it's got a big community, and it's not a meme coin or some obscure new project. So when new investors or institutions, which I'll get to later, rotate into altcoins, ADA often comes up as one of the candidates. In a bull run, new money might be a little wary of chasing the truly wild stuff and instead choose something like Cardano, which feels a tad safer, at least by crypto standards. It's kind of the blue chip mindset. If Bitcoin is gold, Cardano might be something like silver in the altcoin world, often grouped with ETH, XRP, etc. as major platforms. So, bull run rotation, check. If history rhymes, at some point in the next year or two, we'll see that magical flip where ADA and its friends start to outpace Bitcoin for a while. And that's when ADA could make a serious move. But price alone isn't enough. We need to consider what's happening behind the scenes with Cardano itself. So let's talk about something that Cardano holders love to discuss: staking. Staking, ADA's secret sauce for a supply squeeze. One thing that sets Cardano apart is its proof-of-stake network and the huge participation of its community in staking. If you're newer to ADA, staking means locking up your ADA, delegating it to a stake pool to help secure the network, and in return you earn rewards, more ADA. It's a beautiful system. You're incentivized to hodl and participate rather than trade or speculate. So why does this matter for ADA's price and our $5 goal? Because when you stake ADA, your coins are effectively taken out of circulation. They're not being sold on exchanges day to day. The more people stake, the lower the liquid circulating supply on the market. And basic economics says if demand rises and supply is constrained, prices tend to go up. Right now, Cardano has a very high percentage of its total supply staked. Consistently, it's been something like 60% or more of ADA in circulation being staked in pools. Think about that. Over half of all ADA is just chilling and staking, not looking for a buyer. That creates a kind of supply shock potential. If suddenly a wave of new buyers comes in, like in that bull rotation scenario, and tries to grab ADA, they're fighting over a relatively small portion of coins that are actually available for sale. This can amplify price moves to the upside. In fact, analysts have pointed out that as more ADA gets staked, circulating supply declines, and that could positively impact market value. Cardano's design even encourages this by offering staking rewards that make people want to hold long term. It's like the opposite of an incentive to sell. Let me put it in a fun way. ADA staking is like a black hole slowly swallowing up coins from the market. Or maybe a better metaphor, it's like millions of ADA holders collectively decided to become squirrels hoarding nuts for winter. They stash their ADA in staking wallets, earning yield, and those nuts, coins, are not easily shaken loose even when prices wobble. This makes Cardano's supply dynamic quite healthy from a long-term investor standpoint. We're not seeing insane inflation or constant token unlocks dumping on the market. In fact, ADA has a capped supply of 45 billion, and most of it is already circulating. So inflation is low and staking locks up a big chunk of the supply. Chef's kiss for a potential price run. Let's get specific. Right now, staking participation is robust and growing. By 2026, if Cardano's ecosystem keeps expanding, we might see even more ADA staked, especially if new people buy ADA and immediately stake it, because that's just what you do on Cardano. Some projections or community hopes suggest staking participation could climb if, say, new DeFi platforms or governance models reward active staking even further. The key takeaway is that increased staking equals reduced selling pressure. One source put it succinctly: the circulating supply declines as more ADA gets staked, which could have an impact on market value. Cardano's staking incentive structure encourages long-term holding. Exactly our point here. I want to mention, on a personal note, I'm contributing to this dynamic too. I've got ADA that I stake, and shameless plug, I even run a Cardano stake pool called Cheek. Yep, like cheeky. Many in our community delegate to the Cheek pool to earn rewards while supporting decentralization. It's honestly a win-win. You earn passive ADA and you help keep the network running smoothly. Running a stake pool has shown me firsthand how passionate and committed ADA holders are. They're not in it just for a quick flip. They're in it for the tech, the mission, and yes, the rewards too. So if you're holding ADA and not staking yet, consider it. Even if not with my pool, any reputable pool will do. Though, of course, Cheek is always open to you. The more of us stake, the stronger Cardano gets, and the tighter that available supply becomes. All right, so far we have bull market wins possibly at ADA's back and a community that's locking up ADA and taking it off the market. Those two already start painting a scenario where price pressure could build up. But now let's talk about the engine under Cardano's hood, the tech upgrades and fundamentals that could make ADA more deserving of a higher valuation. Cardano gets called the turtle of crypto for a reason. It moved slowly at first, but it stuck to a research-first approach and has delivered major upgrades over the years. Those upgrades matter because ADA can't reach long-term value on hype alone. The fundamentals need to grow, and they have. Alonzo, 2021, brought smart contracts and turned Cardano into a real dApp platform. Vassal, 2022, improved performance, making transactions faster and cheaper. Hydra, ongoing, is Cardano's big scaling solution. Once fully rolled out, it could allow huge transaction throughput, making the network ready for large-scale use. Voltaire governance will let ADA holders vote on proposals and fund development, giving Cardano true long-term sustainability. Other enhancements like Mithril, sidechains, and improved developer tools continue to make the network faster, more scalable, and easier to build on. All of this increases real utility, which is key for ADA's value. Why this matters for the $5 discussion: if Cardano's ecosystem is thriving by 2026, more dApps, growing DeFi, major partnerships, high usage, then demand for ADA rises naturally. That's the same dynamic that helped Ethereum's price surge during its peak usage years. If Cardano hits major milestones, scales effectively, and attracts real economic activity, ADA has a stronger foundation to reach higher valuations. It's much easier to justify a big price target when the network underneath is actually busy and delivering. With that groundwork covered, the next piece is the role of institutional interest, because fundamentals plus big money is where major price moves can happen. One of the most interesting shifts lately is the rise in institutional interest around Cardano. For years, big money only cared about Bitcoin and maybe Ethereum. As the market matures, though, institutions are looking at other large caps they consider lower risk, and Cardano fits that profile with its research-driven approach and clear roadmap. In early 2025, the SEC acknowledged a Cardano ETF filing from Grayscale and Hashdex. Even without approval yet, the filing alone signals that traditional finance is taking ADA seriously. Then came an even bigger surprise: reports that the US government listed Cardano as one of 5 cryptos in a national digital asset reserve. True or not, that kind of attention pushed ADA up 35% in a month and showed how powerful institutional signals can be. You can also see the interest in on-chain behavior and investment products. Large wallets have been accumulating ADA on dips, and Cardano is included in several crypto index funds, like Grayscale's Digital Large Cap Fund. Institutions like ADA, because it's built on peer-reviewed research, uses energy-efficient proof of stake and hasn't been tagged with major regulatory issues. Looking ahead, an approved ETF, whether in the US or elsewhere, could open the door for mainstream money to buy ADA just like a stock. Cardano's real-world partnerships, especially in regions like Africa, could also attract corporate or government adoption. And if institutional players start joining Cardano's DeFi ecosystem, they'll need ADA to participate. In short, institutional interest acts like fuel. Retail enthusiasm can move markets, but institutions add billions and often chase performance once momentum starts. If by 2026, Wall Street sees Cardano as a secure, scalable, blue-chip blockchain, a 5 ADA becomes much easier to imagine. Now, with that context, let's shift to the final piece, the people and infrastructure that keep ADA moving, its community and liquidity base. If there's one thing that really sets Cardano apart, it's the community. It's massive, loyal, and has stuck with ADA through every high and low. That kind of long-term conviction matters because it creates a strong base of holders who aren't quick to sell at every dip. It also fuels organic marketing. Cardano doesn't rely on flashy ads because the community does the talking. Reddit, X, YouTube, wherever you look, people are educating newcomers, pushing back on FUD and promoting staking. It keeps momentum alive when the market heats up. On a personal note, this whole investigation format came from discussions in our Discord. People kept challenging me with the question, can ADA reach $5? The vibe is optimistic but grounded. We share data, upgrades, news, and plenty of memes. If you're not plugged into a community yet, join one. It makes the journey more fun and you learn a lot. Ours is open if you want to hop in. Now, liquidity. ADA is everywhere. Binance, Coinbase, Kraken, pretty much every major exchange. It's easy to buy, pairs with all the big currencies, and moves billions in daily volume. High liquidity means big players can enter without blowing up the price, and it keeps the market stable while still allowing strong upside moves. Derivatives add another layer. ADA futures and options bring in more traders and volume, and they open the door to things like short squeezes during strong rallies. On-chain liquidity will matter too. As Cardano's DeFi grows, more ADA will flow through DEXs and lending platforms, helping price discovery and making the ecosystem healthier. Scale is the final piece. ADA already sits among the top crypto assets, which shows broad trust. A $5 price would put its market cap around the mid-hundreds of billions. Big, but not unrealistic in a strong bull market. Cardano has the infrastructure, visibility, and accessibility to support growth at that level. With all that in mind, let's bring it back to the big question. So, is $5 ADA by 2026 realistic? Short answer, it's possible. Not a sure thing, but well within reach if several factors line up. Technically, ADA sits at a key point. A breakout from its long falling wedge could signal the end of the extended downtrend and open the door for a strong move up. If the broader market sees a bull run, large cap alts like Cardano usually benefit after Bitcoin leads. That kind of environment would give ADA room to run. Staking reduces circulating supply, so if demand rises, the available liquidity tightens and price can move faster. On the fundamental side, Cardano keeps improving. With upgrades like smart contracts and scaling tools such as Hydra, the network should be more capable and widely used by 2026. Institutional interest is growing too, with ETF discussions and government recognition adding credibility and potential capital. And finally, Cardano's big community and global liquidity help support large moves without breaking the market. Put together, $5 isn't a wild call. It's a scenario that could play out if market momentum and Cardano's progress line up. Now, let me temper this with some realism, because I'm not here to hype you into aping all in. We keep it rational on this channel. There are challenges and wildcards. For one, $5 is a big psychological number. We'd be talking about Cardano approaching or exceeding its previous all-time high around $3 by a lot. Breaking ATHs often requires exponential growth and new narratives. It might not happen smoothly. There could be big resistance at, say, $1, $2, $3 along the way that takes time to overcome. We should watch those milestones. Reclaiming $1 and $2 would be early signs that ADA is on a trajectory towards that $5 zone. Also, the broader crypto market needs to cooperate. If by 2026 we are in a global recession or regulators have dropped an anvil on crypto, then even the best fundamentals might not get ADA there by that timeline. Conversely, if the next 2 years bring favorable conditions, think reasonable regulations, maybe even Bitcoin hitting some crazy numbers like $150,000, just speculating, then large caps like ADA could indeed go on a tear. From a personal standpoint, I recall a time I thought $1 ADA? Nah, that's too high back when it was a few cents. And then 2021 happened and blew that expectation out of the water. Crypto has a way of surprising us, both on the upside and downside. So I'm positioning myself in a way that if ADA does reach these lofty levels, I'll benefit. But if it doesn't, I'm still okay since I stake and earn rewards and diversify within crypto. That's not financial advice. Remember the disclaimer dance we did earlier? Just sharing my approach. One more thing, I always ask, what could go wrong? The bear case would be if Cardano fails to deliver on key promises. Imagine Hydra doesn't pan out or DApp adoption stagnates, or if a competitor steals its thunder completely. It's a competitive space. Ethereum, Solana, newer chains, all vying for market share. Cardano needs to keep its momentum. The good news is it has been delivering lately, and that's why I'm optimistic it will continue. In our free Discord, one of my buddies joked that expecting 5 ADA might be like expecting a turtle to win a race against rabbits. And I replied, sometimes the turtle does win because the race isn't always to the swift. It's to the one who keeps going steadily and avoids blowing up. Cardano is that steady turtle, and a bull market can put a jetpack on that turtle's shell. So here's how I see it. $5 by 2026 is the optimistic scenario, but it's grounded in a lot of real catalysts we've discussed. I wouldn't bet my house on it, but I'm certainly positioning some of my portfolio in ADA because the risk-reward looks attractive. If ADA even gets to half that, $2.50, that's a great return from today's prices. If it reaches $5, it'll be party time in the Cardano community for sure. And if it somehow goes beyond, hey, some forecasts even throw around numbers like $10 by 2030 in very bullish cases. Well, I might just frame a Cardano white paper on my wall or something. Thanks for hanging out with me on this little thought journey. I tried to keep it honest with a bit of humor to make the crypto chaos easier to digest. Whether you've held ADA for years or you're just getting curious about Cardano, remember to do your own research and make choices that fit your risk tolerance. If you want to chat more, swing by our free educational Discord. It's a solid place to learn, share, and meet others in the space. And if you're thinking about staking ADA, consider the Cheek Stake pool or another strong community pool to support the network while you earn. Will ADA hit $5 by 2026? I'm excited to see how it plays out, and I'll be here covering the ride. Drop your take in the comments. Moonshot or reasonable target? Thanks for sticking around. Stay cheeky, stay crypto savvy, and take care.